How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for June 12, 2018. Here's a snapshot of all the positions that the banks were holding on the majors and the US dollar. And so let's take a look at gold and see what the institutions have been doing. So we can see that we've been expecting a move to the downside towards this area for quite some time, and now we're starting to get that. This last week we saw that big push to the downside, but before that push to the downside took place, what can we see the institutions did? So we can see that they increased their longs from 185 to 192,000, but shorts still remain aggressive here, even though there was a slight decline in short positions. Considering previous positions, they are aggressive with their short positions, and that makes sense because we saw that drop. Now, I've been saying that even though price is dropping towards this area of demand, I'm not going to buy blindly, because there is a very good chance that we see a deeper penetration into this zone like this. So if I do end up taking a long here, it would have to be a momentum shift off of this area and then getting in long. So I need it to be proven to me that the institutions do want to fill in their demand and cause price to go up. So looking at this here will be instrumental in telling me whether or not they want to do that once price gets lower. Alright, by simply just looking at the coloration of the cells here, we can see that it is more neutral than bearish. So with that, I'm not interested in taking any positions. It's just not a good time to be trading gold right now. But this move is starting to set things up for the future. So I'll wait until something is clear in the coming weeks. Oh, went wrong way. This way. Okay. So now we've got oil. What do we see with oil? Well, we can see that as price was consolidating, the institutions added more to their longs from 709,000 to 720,000 and pretty much did nothing with their shorts. Okay? And so price pretty much just stayed where it was at. But this past week we see a big drop in price, which is what we've been expecting. And now we're just about testing the weekly 20 EMA. I'm believing that price is going to come down here, right down to this weekly area of demand. So very heavy profit taking on longs, which we've been watching. And this previous week is the first time that they've actually added longs. So it's a little bit deceptive, right? But you can see this big green, big candle, big wick pushing price up right here. So that could have been the demand coming in. Okay? And what we will most likely see on next week's report is the shorts being added to. Either that or even more longs being closed out. Okay? But either way, we're getting that drop, and most likely a continuation of that drop to the downside. Okay, let's take a look at the US dollar first. What do we see? We see that institutions are getting a little bit more aggressive with their longs. Okay, from 33,000 to 35,000, and they increased shorts by just about 1K. So the net result was long exposure jumps up from 53% to 54%. But if you take a look at the coloration of the cells, very blue. Okay, I've added a lot more historical data to some of the pairs. It's taken me quite some time to collect all the information and to put it in my templates and do the coloration and all that. So but I'm happy to say that I've added quite a lot of data for the US dollar, the pound, and the euro, which has given me this coloration here, aggressiveness on longs, and a neutral sentiment here. So it's a good time to be neutral here, because you could tell on the charts, right? We're getting this reversal. Price was starting to come down, and then now we just reverse back to the upside. But is there really any good trading opportunities? Not really. Not from what I can see on the chart. So it's best to just sit on the sidelines and wait for there to be some clear setups. But we can see that aggressiveness is slowly starting to come into the market for longs, which is giving us that pressure to the upside. Okay, let's take a look at the Aussie. So what do we see with the Aussie? We see that the institutions are still aggressive with their shorts. Even though they closed off some shorts, they also closed off some longs becoming very cooled off. And that comes as price was rallying right up, testing the weekly area of supply, and now dropping. Okay? So we've been waiting for that test of that weekly supply for quite some time, and now we are getting it. And now it seems with the shorts being aggressive and longs being cooled off that the pressure is to the downside, and we're most likely going to get a move like this. Okay, let's go on to the next one, US CAD. So the US CAD, we see that the institutions are pushing price up, but before that price was consolidating, and they took some off of their longs and they took some off of their shorts. Shorts becoming more cooled off, longs still less aggressive but still in that aggressive territory. And we can see we got a big drive to the upside this previous week. The coloration of the cells are in more of a neutral territory right now. They used to be a little bit more bullish, but now in a neutral, which is good because we are hitting some supply right now. Okay, and there's no telling what's going to happen from this supply. We can get a reversal or we can get a break to the upside, hitting the monthly area of supply right here. Okay, and considering where the US dollar is, there's room on the US dollar for a move to the upside. So it's possible that this area gets taken out and we get a bigger push to the upside. But either way, we can't buy when price is in supply because we don't know how it's going to react. So the fact that this coloration here is blue is just, it's telling us that it's doing its job. The coloration is giving us the proper warning. So that is what is to see here. And so let's take a look at the US Swiss franc. What do we see? Longs are aggressive, shorts are cooled off. Increase in long exposure, supporting the move further to the upside that we've been expecting. The top side of the descending monthly trend line is now being contacted and being used to catapult price to the upside. We have a weekly supply in control that's already been tested once, twice. Third penetration will most likely take it out. Okay, we can see that descending trend line already penetrated, and with lots of strength to the upside, it's more likely than not we're going to see a bigger push upwards like that. The Euro US dollar. So a lot more historical data has been added to my templates, and the coloration of the cells have now produced this here. Shorts becoming aggressive. Longs very aggressive here, but shorts becoming more aggressive, and that comes as price was rallying up into that weekly area of supply, now being respected and price responding to the downside. Coloration of the cells, they are bullish but becoming more and more neutral. Okay, bullish but more neutral, and that's because of this massive amount of long positions that they're holding. So they can easily drop price like this, but this is going to be a nice time to learn some lessons here, because with this overexposure to the long side, if they are going to just drop price like this, I really want to know how they're going to manage this big long position. Okay, are they going to manage it by hedging it all the way down like this? Hard to say. Are they going to bring price down to here and then reverse it and then close longs at the top? Hard to say again, but what I can say is that they are getting aggressive with shorts, and that's why we're seeing this drop here off the weekly supply. But we have to be careful because of this here. If they weren't so overly long, I'd say ride this sucker and hold positions for a long time. I am looking to get in short, but I'll be very careful as I'm holding those positions short, simply because of this. All right. Let's go on to the pound. What can we see with the pound? So on the pound, we see there was an increase, but then a decrease in longs from 75 to 78, and then down, and then down to 69,000. Longs are still aggressive. Shorts, very, very big drop in short positions from 71,000 to 58,000. That's pretty substantial. Okay. And there's a couple of reasons why that could be happening. It could be to maintain price here, or it could be that they're closing off shorts because, let me try to remember what I wrote in my report. Let me see here. Off the top of my head, I wrote it in the report for members as to what the reasons were. So let me just try to remember what the analysis said. So we see, they took off some longs. So when you take off longs and shorts, it helps to maintain price. Or they could be taking off shorts because they are expecting a push to the upside like this. So it's hard to tell at this point, but there isn't any clear setups to take a short here, so I'm not going to be. And you can tell by here the coloration of the cells, even though 54% of the overall exposure is geared to the long side, it's not as long, the sentiment is not as bullish as it used to be, entering more into neutral territory. So any positions being taken have to be taken with extreme caution. Okay, let's go on to the US dollar Japanese yen. So this one looks really good to break to the upside. We have shorts aggressive, longs are cooled off, and we have an increase in short exposure from 48 to 52%. So why this big shift, right? We've seen some really big changes since this contract expiration here. Okay, we saw they closed off a lot of longs but did not replace those longs. Okay, and we're seeing price move to the upside. So next week's report is going to really display the positions based on the contracts being expired, because they will expire on the 18th. And so positions have to be closed out for those old contracts and opened up on the new ones. So whether or not they're going to open the same amount as they had previously opened is what is going to be my focus of attention. So on the chart, you can see that price wants to break up. I mean, that trend line here is being penetrated once, and now with this weekly bullish engulf, it looks like it just wants to break to the upside. We got that trend line just above price, but I believe we're going to see a move like that to the upside. Bottom line is sentiment is bullish, bearish, bearish, neutral. So not really conforming with what we're seeing on the charts here. But again, there could be many reasons for that to be so. And last but not least, Kiwi dollar. We see longs are aggressive and they're increasing, shorts becoming less aggressive, but coloration of the cells like a bullish neutral. Okay, neutral bullish sentiment. So it's showing that price wants to go up, but we got to be cautious. And that's exactly my feelings about taking any longs here, because at the end of the day, we got supply and control and price wants to drop. So looking for more of an aggressive short position being held by the institutions, and then waiting for obstacles to be taken out, and then I'll go short. Alright guys, that's your CFTC report for this weekend. I hope you're enjoying it. All you men out there, fathers out there, happy Father's Day. Having a good time with my family, and when I'm done this, I'll get a chance to spend more time with them. Okay, enjoy the rest of your weekend, and we'll talk to you soon. Take care.